The second area that I see a lot of people focused on, this was the number 2 thing that came up when I was polling top producing loan officers. It's coming up with solutions for your move-up buyers. Most notably, it was buy before you sell. This is big time for people because we all know about the lock-in effect, and we all know that the lock-in effect of the low interest rates that were sold during 2020, 2021, the COVID years, if you will, people are still locked into those homes. Now, we've seen that ease quite a bit because people need to move. Like we've talked about this, right? Their family size grows, their needs change, their job relocates them. They were working remote because that was the thing, and now their company wants them back at work, and now they're commuting 2.5 hours, and it's no fun for them, so they need to move. But people are very worried about not just not being able to afford as much of a home because the rate's higher, right? So you can still use some of those affordability strategies. They're also worried that they're going to list their home and not be able to find one because of limited inventory in many markets. So they want to buy first and then list their home and get that thing sold. So there's lots of strategies out there. I'm not going to go into these in detail, but many investors will do loans where they exclude the payment on the departing residence from your debt to income ratio. If you don't have a program like that, I would find an investor that has that program because they absolutely exist with multiple different investors where you could exclude the departing residence from your debt ratio. You can even take out a home equity line of credit with some companies against their departing residents and then not use that payment in their qualifying ratios for the new purchase. The list goes on. Point is that there is a lot of strategies right now that top producers are using that are all geared towards I can help you purchase your new home without having to sell your old home first. We also have cash buyer program. There's others out there. So this isn't specific to what we offer, but I'm just telling you, these strategies are universal if you can find the right resources within your company or your channel of doing business, whether you work for a bank or you're a broker. These products are out there. You got to get your hands on them because helping move up buyers buy before they sell is a big strategy right now. Self-employed borrowers, right? We've talked about non-QM a lot on this podcast. I am very bullish on non-QM. I was saying that I think in the next couple of years, it's going to be 27 to 30% of overall mortgages are non-QM. I just heard projections from, I forget who, but someone very notable, I'm sure, but that 35% is what they're predicting. 35% of all mortgages being non-QM. And I believe that that's possible. And the reason I think that is because it's not like you're looking at people right now through the lens of non-QM. I think there's a lot of borrowers that are either not applying for loans because they don't know that these loans exist, or loan officers that are not identifying that there is other non-QM solutions for the borrower sitting right across the desk from them when they're doing their pre-approvals. So focusing on first-time home buyers and self-employed borrowers and educating the self-employed community that these loans exist, whether that be through social media, training classes, work with your real estate agents and referral partners. This is where I'd reach out to a CPA, financial planners. They probably have a database of folks that are self-employed that don't know all the options that are available in the non-QM space because it is a growing part of the market. So they're focusing on self-employed.